Hello and welcome to another financial analysis video with myself, Moeed Amin, and Ted Wayman. The goal for the show is to help you build your business acumen by helping you understand and read finance. And the way we do that is we analyze financial statements of well-known companies so that you can apply those learnings to any business that you are interested in, whether it's now in the annual statement or even the quarterly statement. So if you're an investor, a budding investor, salesperson, or even someone who is involved in business in some way, shape, or form and has a career in it, learning to understand the language of business, which is finance, is crucial to your development. And that's what we're going to be doing here today. So let's jump in and talk about the company that we are analyzing here today. So we're analyzing Ryanair. So particularly for those who are based in the UK and Europe, you'll be familiar with Ryanair. Ryanair is a well-known low-cost airline business. It's an Irish business that was founded in 1984. And with the deregulation of the airline industry in Europe in 1997, basically Ryanair saw an explosion in terms of their business then, and they have routes in over 40 different countries now. So this video, or this company, sorry, was a request from one of our viewers, and we receive a lot of these requests. In fact, I'll say more than maybe about 98% of the videos now, or the companies, sorry, that we analyze are requests from you, the viewers, and I'll talk to you in a moment about how you can make your own request as well. So Douglas, thank you for your request. Here is your company analysis. So if you want us to analyze a company for you, really like to get our perspective on that, then all you can do, or very simple, is just leave a note in the comments section of any of our videos, put some context behind why you're interested in this company, and we will place you on the list. The more context and the more interesting that context, the higher you'll be placed on that list. So do please leave some notes behind that. And don't forget to like, share, subscribe. So before we go on to the analysis of the company, just some context around the share price, because it's important. This is not an investment show of any kind, but it is important to have that context as well. And we'll stick around towards the end because we're actually going to talk a bit more detail around the share price and the context with the financial statement. But company floated on the stock exchange in 1997. If you'd invested back then, you'd be sitting on a nice profit of just over 1,700%. If you invested 5 years ago, you'd be sitting on a decrease of about 46%. And if you invested a year ago, you'd be sitting on a decrease of 49%. So a bit more pain in last year than over the 5-year period. So without further ado, let's pass over to Ted, and we'll share the analysis or our analysis of their latest financial statements so that you can do your own analysis for the future. So Ted, please take it away.
Hi, I'm Moeed. Yes, thank you very much, and welcome back to all our subscribers. If you are not a subscriber, then welcome to you as well, and please don't forget to subscribe. So hit the subscribe button wherever it is. I know that on these videos they always point at a subscribe button somewhere, but anyway, so do subscribe, do like, share the video if you like it. Here are the accounts of Ryanair available on their website. You'll notice it says 2022, and we're still in 2022. So these accounts are at the end of March 2022. So that's what we're looking at. Summary of the financial information here, but we're going to whiz all the way down through the financial statements through to the kind of the core numbers, which are a little bit further down. So you've got to go a reasonable distance in order to find. They see the board, Michael O'Leary, chief executive, signing off the balance sheet. So we're going to start off though looking at the income statement. So here is our income statement. Now we're looking at 2022. So 2022 is this column here. We're in millions of euros. So total revenue is about 4.8 thousand million. That's 4.8 billion euros. A significant increase on 2021, which obviously was the year of the pandemic when all the aircraft were grounded. So really, to get a benchmark, we need to compare to 2020. So 8.5 billion in 2020. Remember, that's the year ended March the 31st, 2020. So that's basically just as the pandemic was starting to hit, just as the lockdowns were hitting. Ryanair closed their 2020 accounts and then were effectively obliterated in 2021, just no flying at all, and 2022 starting to make that kind of that journey back. So still, only just over halfway back to 2020, but looking to recover that kind of that, to that full operating model. Now, because of the nature of the business, they don't actually have a cost of sales. So there's no gross profit in here. So what we can do is we can kind of make a guess, and we can say that, our kind of, this is a, these are very much our kind of our fixed costs down the bottom, and kind of the more variable costs are sitting up at the top. So certainly fuel and oil that goes into the aircraft, the airport handling charges, depreciation, the staff costs are going to be mainly part of the cost of sales, and also this route charges. So if we kind of just say, well, let's classify those as a cost of sales, then really they're spending 93p for every pound, or 93 cents for every euro you spend on a ticket. They are spending in terms of running the business. So you'll notice the operating expenses are pretty high, and this means that they're making an operating loss. Okay, operating loss in the previous year as well. Reasonably well reduce that operating loss. So you'll see kind of obviously the fuel is going to be connected to the number of flights, but even the staff costs would have gone down significantly. Part of that would be a lot of furlough in there, but also just kind of just protecting them. I don't know to what extent they made layoffs, but they are definitely managing their costs, and that's what Michael O'Leary does very well. Very, very good at managing his costs. So you'll notice that kind of in a traditional sense, we are the organization is profitable. The organization is profitable, sort of in normal times, although we are struggling to get back to profitability, but we should be able to do it as the airline starts to come back. So the loss for the year 2022 is about 240 million, lot worse in 2021 when they lost just over €1 billion, but in normal times this is a profitable business, and they're a profitable business because they run big volume of flights, and also they're just really good at managing the costs. So these costs here, Ryanair, they're high compared with the revenue, but that's because as Ryanair's business model is very much about flights as cheap as possible, and often you'll find that the Ryanair flight is cheaper than the train journey to get to the airport. Mind you, sometimes they kind of define flying to London. You can end up in quite a long way from London. Let's put it like that. Where Luton, I would not say is London, but hey. So there you go. They are making a loss at the moment, but there's no reason why, as the industry starts to come back, that they shouldn't move back to break even and back into profitability as they did in 2020. Look at the balance sheet. Go back up here to the balance sheet. Find the balance sheet. Yeah, here we go. So here's the balance sheet. So non-current assets, things they need to run the business, property, plant and equipment. A lot of that'd be mainly airplanes, for example, in there. So lots and lots of assets. Not a lot of inventory because they don't sell anything. So they'll have interesting enough, a big number in derivative financial instruments. Don't get too worried about that. They're really just hedging. Those will be hedging on the price of oil. So Ryanair will sell you a flight in 6 months' time. They need to know the price of the fuel to fill up that airplane in 6 months' time. So they'll enter into derivative contracts, typically futures and options, in order to manage and be able to price those seats effectively. And because they're operating at such small margins, they really need to get that absolutely right. So those are the derivative financial instruments. And then they've got a reasonable amount of cash sitting on the balance sheet, and you'll see that cash is pretty consistent. So again, pretty good at holding on to that cash. Interestingly enough, the derivative financial instruments, much lower in 2020. Maybe there's a lot, maybe they're feeling there's a lot more volatility in the market as a result. We should often sort of compare the derivative financial instruments, the assets, to, you'll notice there's derivative financial instruments, the liabilities. So the kind of, you'd say Ryanair was out of the money here, and they were kind of in the money here. So maybe they bought a derivative financial instrument when the price of oil was very, very low, and obviously it's now very, very high, for example. In terms of their current liabilities, most of it is so they've got some trade payables, those are the suppliers. Accrued expenses, so this number here is really going to be, they call it accrued expenses and other liabilities. It's going to be mainly deferred income. So people are buying flights today, but they're not actually going to physically fly until the following year, so that we buy our flights in advance, and Ryanair is not allowed to recognize the revenue until you actually get on the airplane and they fly you from A to B. So they park it, they'll have the cash, they'll park your ticket basically in here, but they have to show it as a liability. They owe you a refund, or they owe you the flight, either way. So those are the current liabilities. Current assets to current liabilities is reasonably healthy. It's kind of they're very close, but it's not a major problem, because again, this is a very cash generative business. We pay for a flight and then we fly. So that does help from the business operating point of view. And you'll notice on the non-current liabilities, they've got some debt here sitting on the balance sheet. Not an excessive amount of debt, but a reasonable amount of debt. So we might just compare the debt that they've got, compare that to the equity that is funding the business, and we see that it's about about 40% debt funded, and 60% equity funding. So that's the kind of the funding, and we obviously want to just sort of check our income statement, make sure they can afford that debt. So when we see the income statement, remember, we're always looking at the finance expense. In a normal year, they would be able to afford that. So if 2020, if we take that as a normal year, they make an operating profit of $1 billion, and they're paying 480 million in interest. Now we see obviously they're making a loss for 2022, but we expect that to come back to a more normalized profit. However, watch that finance expense over the next few years. We are going to see that number going upwards. Interest rates are going up, inflation is taking off, and therefore the cost of debt is going to go up. So if you are analyzing companies, watch their headroom very closely, that interest cover, their ability to absorb increases in interest is going to be absolutely crucial to a company's performance. Look at the movement in equity. So just looking at the balance sheet. I've lost my balance sheet again. Here we go. So here's the balance sheet. Just looking at the movement in equity. Always interested in this line here about the retained earnings, about what's going on. You'll see the retained earnings has been going down. It's been going down because these guys have been making a loss, and so I would expect them, because they've been making a loss, they've been holding on to their cash and not making any payments. So let's have a look at what's going on. So 2 years ago, a nice big profit, and as a result of that, they were able to make a share repurchase. So so here's the profit for the year. Rather than paying a dividend, they used that cash in order to buy back the shares. Now, obviously, that was pre-pandemic. They didn't see the pandemic coming, and then suddenly we then hit our loss for the year. There's the loss in the previous year, and they just go, right, there's no share buybacks, no dividends, and again we've got the loss for this year. So these guys, they stopped paying dividends. They stopped buying back their own shares. They're now in balance sheet reparation. They're repairing their balance sheet. They're bringing themselves back into profitability, and they should then once they're back in that profitability and they're kind of stable footing, they should be in a position to start their either share buybacks or dividends, however they are looking to return that cash to the investors. Finally, we got our cash flows. Here is our cash flows. So quite interesting here. The loss they're making in the year is actually, from a cash perspective, they are generating cash. Now, again, I mentioned that they would be generating that cash because these guys will have been selling flights today, but so they get the cash in today, but they're not going to deliver those flights until in the months in the future, and therefore they generally have pretty strong cash flows. You'll notice that when the things turn around, they make a loss, but because of all the flights that people have bought in advance and now they've got to give refunds out, suddenly the cash flow was really negative. So this is kind of like a leveraged cash play that when things are going well, they're making a profit and they're generating cash, and when things are going badly, not only are they making a loss, but they've got very, very strong negative cash flow, and that could potentially wipe out an organization if it doesn't have decent amounts of reserves or confident backers. So here we see, for example, this number here. This is our kind of our deferred income. So we see that lots of people have been buying flights to fly in the future, and therefore nice strong cash flows coming through for these guys. What else is going on? Bit of capex. So there's the capex. Very little last year for obvious reasons, as they sort of hunkered down and survive the COVID. So there's their cash flow in terms of negative. So we just like to see, what's the kind of the cash cover. They're generating more cash than they're spending. That's fantastic. Little bit of refinancing of debt going on here, and you'll notice the previous year. There was not only were they borrowing money in order to survive the COVID, there's the net effect of borrowing more money than they are repaying. They were issuing shares in order to raise additional finance to basically survive the pandemic, and that's allowed them to keep their cash levels reasonably constant, which is good for any investor. So there's the kind of the financials of Ryanair. Nothing really that kind of jumps out at me in terms of in terms of any kind of warning signals. As we said, they are they're about they're just just over just under 50% debt funded, just over 50% equity funded. Liquidity doesn't look like a problem, because of their strong cash flows. They've got money in the bank, so they are they can survive. They don't have negative cash flow. They did have negative cash flow in the previous year, in 2020, so 2021. Sorry, that would have been kind of sort of squeaky bum time. But they're coming back, and I'm pretty confident that these guys will come back. So let's have a look at their share price and see what's actually going on in their share price. Now, quite interesting here that we can see. I'm not sure quite what's happened to my to the x-axis. I'm not sure what this is, but we can see there's been obviously a big tank. This will be COVID related, and then a recovery. Oops, sorry, I don't know what's happening there. And then we're looking at this kind of the share price has been falling. Now, my understanding of the share price falling, and this is my kind of limitation of the industry more than anything else. Obviously, we're doing financial analysis here. Is that I think that there's a kind of a big push for a kind of a European airline. People are calling it Macron Air, for example, and if somebody is kind of more familiar with this, then please do leave your comments in the comments section, because we'd love to kind of know more about it. But my understanding is that there are moves afoot to kind of launch a low-cost European flag-carrying airline, sort of semi-sponsored by the EU state, which would be able to compete with Ryanair on a cost basis, because it would be subsidized, which sounds slightly anti-competitive and slightly anti-EU, but hey, and I may have got completely the wrong end of the stick here, but it would also challenge Ryanair, kick them out of a lot of the air slots, and really cause a lot of headaches for the business. So if anybody knows about that, or why there's another particular reason why the share price has been slumping, then please do let me know. Anyway, so it tells me here that that the company is worth 12 billion, nearly 13 billion euros. Sorry, it's actually in dollars, so $13 billion. That's a P ratio of 68 times, which I guess will be based on sort of half year earnings rather than on the full year results we're looking at. A 68 P ratio is reasonably high, but again, that suggests that it's quite expensive. But this is a company which is very much in recovery mode still, and we are expecting it to return to its heady heights. So there's Ryanair for you, Moeed. I'm not sure I've managed to kind of shed any light on the kind of specific industry challenges there, but it looks to me like it's in reasonable financial health. Certainly no gremlins jumping out at me from that quick financial analysis.
Yeah, that was still insightful, right? And important to see how some of these recovery stocks, particularly in the airline industry, the changes between, as we saw 2020 to now 2022. And for any of you that are viewing this, you might want to look at a couple of other videos that a couple of other companies, that we analyze within this space. So IAG, so International Airline Group, which owns the likes of British Airways and Iberia. We analyzed them. We also analyzed EasyJet, which is a direct competitor of Ryanair. So take a look at those videos as well if you want to look at some form of comparison and see their financial statements as well. So until then, don't forget to like, share, subscribe. But until then, we'll see you on the next video. Thank you, Ted. Thank you, everyone else.
Catch you later, Moeed. So I hope you enjoyed that video and found it useful and informative. Now, if you want to know more about what I do, then you can visit Talk Financials and find out about the training workshops and the clients that I work with. And the QR code is on your screen right now. If you are interested in being able to do this yourself, to do some financial analysis, there's a couple of resources. There is an online workshop. It's available on my website, or you can click on the QR code and it'll take you straight through to this online workshop where you can learn to read and understand and interpret financial information yourself. Alternatively, there is a book available at all good bookstops, particularly a very big online one, and the QR code once again will take you through to the opportunity to buy the book, and there is also a Kindle edition. Otherwise, that's everything from me. Please, please, please don't forget to like, share and subscribe to the channel. More subscribers means that you're going to get notification about new videos coming up, and also the opportunity to ask questions. And do recommend any videos any companies that you'd like me to analyze for you. I think we've got a couple of suggested next videos coming up, so please do take the opportunity, have a look at the other videos, and don't forget to like, share and subscribe to the channel, and I will see you on the next video.